Hi, my name is Roger Schlater. This video is actually about the personal financial statement, and it is really in-depth. It's a really deep dive to kind of show the SBA personal financial statement. And the reason I'm showing the SBA is a little different from banks. And you'll kind of see what I mean when I put it up there. What I'm going to do is I'm going to give a kind of an overview of everything, and then I'm going to go put up the 3 pages, the main pages of the SBA personal financial statement as I'm explaining it. So anyway, you'll be able to see it when we're going over it at that time. So anyway, believe me, any business loan that you can apply for is going to require a personal financial statement. And it doesn't matter if it's for a business, a home, personal loan. I think about the only thing they don't use one is on a car loan, because they really base it on your credit score and also on your income. Sometimes they will look at your financials or your credit report and just see how much debt you have and all that. But usually they go by the score and the other thing, and the income. So anyway, we're not talking about autos, so we're basically talking about business loans, but it can be used in a home loan also. Personal financial statements, whenever you borrow a good sum of money, the bank is going to want to see a personal financial statement. Now, the personal financial statement is just what you own and what you owe. Usually the top of the form is informational items. It'll have like your name, your address, your company name, your business type, whether it's an LLC, corporation, whatever. And on the SBA form, there is a acronym that is WOSB, and that stands for Women-Owned Small Business. So basically, they have a line that says if you're a woman-owned small business, then they want to know if you're married or single. And I think it's because usually they want the spouse to sign the personal financial statement. So anyway, all personal financial statements have the assets on the left side and the debts on the right side. The date will usually be at the top of the statement, and this is very important. SBA will have the date in the informational section and on the signature part on page 4 of the form. Now you got to remember, this form is actually 5 pages, or it's actually it's like 6 pages long. But anyway, the first page is just a basically information page. Are you using this for a 504 loan? Are you using this for a disaster loan? Are you using it for a 7A loan? And you just check a box on there, and that's about it, the first page. And then they tell you a few things about it. So anyway, most banks will accept a personal financial statement within the last year. SBA, on the other hand, will insist that the personal financial statement be no older than 90 days old. The SBA will also insist upon the document being signed by your spouse. Usually banks are covered by Reg B, which basically says they can't automatically include your spouse in deciding a loan. You have to remember that normally SBA will not either, but they want the spouse's signature on the personal financial, and SBA is not covered by Reg B. They have an exemption. So anyway, the Reg B is covers a number of things, but I've always wondered why the SBA can try to make a spouse be on the loan, and that's really why, because they're not really, they're exempt from Reg B. So anyway, banks will usually make you use their personal financial statement if you apply for a loan through the bank. If you go to the bank and you have your SBA personal financial statement, they're going to look at it and say, here, you need to fill out one of these. And they'll have you fill out their personal financial statement. The only reason why a lot of times we usually don't. I mean, if the person doesn't have a bank in mind, or they have several banks, sometimes we'll have them fill out an SBA. If they think they may use an SBA program, we'll have them go ahead and fill out an SBA personal financial statement. But actually, the SBA will take the bank's form, and a lot of times the bank's forms are a lot easier to fill out. SBA will use the SBA form or the bank form for the bank that is involved in the SBA loan. So if you're just going to banks and just trying to see who's going to do your loan, you don't even know if it's going to be an SBA yet, then you can just use a bank form. And you can actually take one bank form to another bank. They don't care. If they're going to do the loan, they're going to have you fill out their personal financial, though. Now, SBA does not lend without a bank except certain emergencies like the COVID-19 disaster loans. They didn't need a bank. I mean, you were applying on some of those directly to SBA. Bank personal financial statements are usually shorter and usually less detailed than the SBA form. We usually advise borrowers to go ahead and use the bank form rather than the SBA form. If it is shorter, if it is, less detailed, it's easier to fill out. And the SBA form, if you use that form, SBA can use that form to say, whoa, you didn't do this right, or you didn't sign it, or your spouse didn't sign it. And they usually will want your spouse to sign even a bank form if you're going to use that form for the SBA, for an SBA loan. The SBA's form is 6 pages. Page 1, like I said before, just shows the SBA, what SBA program you're going through, like the 7A program, 504 disaster, etc., including what entity to give the completed form to. So anyway, normally you're just giving it to the SBA, for a 7A loan or a 504 loan. It's not that big a deal. So anyway, the next 3 pages, those are the actual SBA personal financial statement. So when I do this, I'm going to apply, when I say we're talking about the personal financial statement, I'm going to, hopefully I'm going to remember there are pages 2, 3, and 4, but a lot of times I'm going to say page 1, 2, and 3 when I'm talking about the SBA actual personal financial statement, the pages that you fill out. So anyway, and we're going to show you this here, so you're going to see them up on the video, so you won't have to worry about it. The next 3 pages, like I said, after the first page, are the actual financial statement, with page 2 being the assets and liabilities, page 3 being the additional clarification of the information on the second page, and then page 4 continues with clarification, and it is the signature page. So really there's just 3 pages you're filling out. The first page is just like a checkbox, 1 or 2 things, and then after the 4th page, the 5th and 6th, they're just rules and regulations, and they talk about the Freedom of Information Act and a whole bunch of stuff. So it's really not, information that's really related to the personal financial statement. So anyway, the last 2 pages, like I said, 5 and 6, SBA informational pages. Page 5, page 5 does show the criminal penalties and administrative remedies for false statements. And they're just kind of trying to put the fear of God into the borrower, so he doesn't feel totally make up stuff on the form. So anyway, I'm going to kind of show you in this kind of what you can fudge and what you can't fudge. And when I say fudge, I'm not talking about lying. I'm talking about just kind of how you look at something. So anyway, we're not lying on this form. We definitely are not. So anyway, the last page is about the federal laws like the Freedom of Information Act, I mentioned, the Privacy Act, etc. Now, first off, you really should report your personal financial statement information as accurately as you can. And I'm saying that because if you lie on your personal financial statement and they can prove it, then that you can actually go to jail for that. So anyway, usually they only find that out if your loan goes bad. Then they start looking at all the documents you gave them to try to find something wrong that they can try to get you for or something. So anyway, that being said, there are areas in the personal financial statement that are, like I said, are fudgeable. I don't mean we're lying. I mean we're just putting your best foot forward. Most of these areas are on the asset side of the form. So anyway, right now we're going to look at the asset side of the SBA personal financial statement, and this is page 2. It's really page 1 of the 3 pages that you fill out. So anyway, it should be up on the screen, hopefully. So anyway, it will be by the time this comes out. So anyway, the first thing we have is cash on hand and in banks. And remember, we're looking at the left side of the page. And I guess on first, remember that the bank info is private, and that lenders cannot really get this information without your permission. The amount of cash can fluctuate over time, and the bank usually does not report every day what your balance is, on a report. So the bank reporting is usually on a monthly basis, where they basically send your balance with any fees subtracted. Therefore, you can fudge this amount. I mean, come on, they don't know exactly how much you have at any one point in time. The bank does not really keep a running total, I do not think. So anyway, if you put too much cash, the bank's going to want you to put more equity down, or maybe want you to pay the whole thing. So there is a you cannot fudge it too much. First of all, on that form, there really is okay. The one thing that we really probably should say is, and I'm going into the assets and liabilities really quick. We do want to go back and look at the very top of the first form, and that's page 2 of the SBA's Personal Financial Statement. And it really has the name, has the business phone, the home address, the home phone, the name of the business borrower, the address, if your address is different from your home, the type of business. And I said some of this before, but this is on, as you can see right now, this is on the top of that page. And then they do say this information is current as of, and then you go ahead and put the date in there. And they say within 90 days of submission for basically 7A, 504, and almost everything. And within 30 days of submission for 8A and BD. So I'm not even sure. I know the 8A loans are ones that are for government contracting, I think. So anyway, and then they have the WOSB, which would be women-owned small business, and applicants only, and they want you to put whether you're married, yes or no. Now we'll get back into the assets. Like I said, the actual cash on hand and in banks can be, that's also cash you get on hand, not even on the bank. So they could ask you to actually get that bank statement and show it to him. My whole career, I've only had SBA do that one time, and it was a gal named Helen in Kansas City, and I think she's still around, but she doesn't work for SBA anymore. But anyway, she actually, on this individual, she actually made me copy his bank statements and send them to her. And I think this was before, I think we sent a fax, because this was before all the internet and all the emails and all that, and the scanning and everything. So anyway, that's your cash part. Now the next one would be savings accounts and retirement accounts. Savings accounts and retirement accounts usually do not fluctuate as much, so you should be fairly accurate. I mean, I rarely see the bank asking for proof of these amounts, but they could. And I've seen some people just put their retirement account information or savings account information, put it, just copy it and put it behind the financial statement. I've seen them do that too. So anyway, but these are not, the bank is probably not going to ask for proof on these amounts. The next part will be accounts and notes receivable. And these are really somebody that owes you money. And this could be a written form, an actual note, could be on a napkin, it could be a handshake deal. These are payments in the future, so no one is really going to check on the valid on whether they're actual. I can't say that word. Whether they're actually trustworthy or not. So anyway, they're not going to ask you to, because a lot of people, you may have one of these and you may not even have anything written down. Usually you should have a note, and you should have a lender and the borrower should both sign it and have the details on that note. But some people, hey, I've seen people do it in a handshake. So it's not that important. I don't think they're going to ask for this information. If they do, I would just write something up. So anyway, life insurance. Life insurance is pretty constant, and the bank or SBA, they're going to want to see the cash value of life insurance, not just the face value. And we have people all the time that when they fill in this out, they're putting the face value of the policy. You know, if it's a $100,000 policy, a $500,000 policy, they're putting that on there. And then we have to ask them, is this cash value? And usually when we ask them that, they go, well, what's cash value? So anyway, normally on a regular life insurance account, you will have a cash value that increases over time. There are some life insurance policies that do not have a cash value. So you got to make sure whether you do, and if you do, it is good. And you can even borrow against, you know, your life insurance policy if you have a cash value, or even the bank will lend to you too if you put that up for collateral. So anyway, usually those are, you know, something that they can actually ask you for evidence of. Most of the stuff they're not going to ask you for evidence of. The next part is stocks and bonds. These amounts can fluctuate, but most stocks, bonds, and mutual funds are very easy to find a value on any particular day. The bank may also ask for a listing because they may, you know, want you to pledge them for collateral, or they just may want to see an actual listing. Most people just put various stocks and then just put a total amount at the end. So anyway, real estate, the value of the real estate is usually in the eye of the beholder. You're not a real estate agent, you're not an appraiser, so you know, you will have to estimate the value of your property, and I would estimate on the high range, because this is not going to be anything they're going to hold you to, because you're not, unless you're an appraiser or unless you're a real estate agent, you really don't exactly know what it's worth. You might have an idea, but I would always estimate on the high side on that. Automobiles, the same for automobiles, estimate on the high side. The banker can look up the value, but usually he won't unless he's going to use it as collateral. If he's going to use it as collateral, he will look it up and ask for the, you know, the exact year of the auto and actually the other specifics, you know, what extras it has, whatever. Then you have the other personal property and other assets. These are your estimation of value. So go ahead and knock your socks off. This can be a valuable collection you have. This can be furniture and fixtures in your house. Usually the value of the business will be put, you know, in the other section. This value is in the eye of the beholder, whatever you think it's worth. You know, hopefully the banker's not going to laugh when you tell them what your business is worth. I do remember a person that came to me for a loan one time, and, you know, I said, well, you know, he was going to sell it to his son. And I said, well, what do you think it's worth? And he goes, oh, $2 million. And I literally started laughing. And then I said, whoa, I had to stop. And I said, I'm sorry. I just seems like an awful high amount to me. And I mean, I don't, you know, we did do that loan though. Or we did do one on his real estate, but I don't know if we did the one to his son. But anyway, you know, you want to be careful. You want to give an amount that's believable. But it is true. I mean, if you're selling a business, it is in the eye of the beholder, and it's whatever you're willing to give it up for. There may be no buyer that's willing to pay you the money, but that's what the business is worth to you. So you have to remember that. And you don't want to use your asset value. You know, a business is worth, you know, whatever you're willing to sell it for. That is what that business is worth. Now, on this page on the right side will be the liabilities. Usually no one will inflate these because it will reduce your net worth. It'll make you look worse. So really, you know, you don't want to inflate them, but, you know, you want to be accurate on auto debt and real estate debt. But most of the other debts can be kind of taken at face value, or, you know, what you perceive them to be. I mean, you know, they can actually, you know, bank to bank, they could probably call up and get your information on your real estate loan. Bank to bank, they could also probably call and find out what your auto loan is, even though I don't think they're really supposed to give that information out. But if you're a bank, a lot of banks will give that information out to another bank. And then you have those liabilities down the right side, you know, and they are, you know, a number of them. And then you come down to your net worth. Now, basically your net worth is your assets minus your liabilities equals your net worth. So just remember that assets minus liabilities equal your net worth. And then the assets total the liabilities and net worth. So anyway, and that's it's going to be on that balance sheet type of form. And then below that, they're going to have an income section. And this is pretty straightforward. but the other income should be described in the section below, like where it says description of other income. So if you have income that's not like a salary, I think they have a couple descriptions there of income. They basically are salary, net investment income, real estate income, and then they say other income, and then they want you to describe that. Other income would be if you had, maybe you actually, go to the casinos and you actually make money doing that. I wouldn't report that though, not to these guys. But anyway, well, let's say you have, some small business you have or something that you make income on that doesn't fit in those, real estate income, net investment income, or salary. Then you'd put it there and you'd describe it. So anyway, that's really about it for the page 2 of the SBA Personal Financial Statement. Now, page 3 is the next one, and this lists sections from the second page and is further detail of the assets in section 2 through 5. So anyway, you should see it here. The first would be section 2, notes payable to bank and others. They kind of want that itemized as to, if you, what banks you owe and what, the original balance, current balance, payment amount, frequency that you pay it, how secured or the type of collateral that you have on it. Section 3, stocks and bonds, and this would be where you actually list your stocks and bonds. So anyway, yeah, you would go ahead and list those. And on the number of shares, you don't have to really put number of shares. You would basically put, you can put various, and then, name of securities. You could just put the if you have them held in a brokerage, put the brokerage name, put the cost, and then the next one would be market value, what the market value is. I wouldn't even worry about cost. I just put the market value down, and then I would put a total value on them. I wouldn't be that descriptive as they are on here. So anyway, then we come to the real estate section. And the SBA's real estate section is pretty robust. It basically, it's real estate owned, but it's got property A, property B, property C, in case you have maybe a vacation home or maybe have an investment property. And they want to know, the address of the property, what type of property is it? Is it your home, rental property, etc. The date purchased, the original cost, present market value, and the present market value is important. Name and address of mortgage holder, mortgage account number. Some of this, I've seen people fill these out to detail, and then I've seen people fill out like what it's worth, what they bought it for, and what type it is, the address, and they have a mortgage balance, and they don't put anything else. So you can, they're gonna, you have to put those amounts. You do have to put the present market value, the original cost, what type it is, whether home or investment property, and then the address. And then you should put if you have a mortgage balance or not. Section 5, other personal property or other assets. That's where you describe what these are, because they really don't have, on the other side, you just got a little line where you put the total. So, these can be described better here, whether it's like a coin collection. Maybe I had a person once that had a whole bunch of silver. Like I think it was like 50 or 75 grand of silver that he had that was kept at a certain place, a certain bank or something, and he didn't have detail on it. He actually owned it. So, but it'd be things like that aren't covered on the other parts, and that's a lot of times where you do have your business where you put on there and explain what that is. So anyway, anything on the other personal property or other assets you do want to describe here. So anyway, that's the page 2. Now we're going on to basically page 3. Or actually, I guess their SBA's page 4. And it would be page 3 of the forms that you actually fill out. Anyway, section 6 would be unpaid taxes. They want you to expound upon that if you have any of that. I hate to say it, I know there's people that owed taxes, but I've never seen this part filled out. So anyway, other liabilities, they want you to describe that in detail, and I really don't have a whole lot of people describe this either. Most people's liabilities are pretty straightforward, but if they do have something that's, if they put it in other liabilities, then you almost have to fill out something on this form and write what it is. Same with unpaid taxes. And then Section 8, life insurance held. They do want to know what life insurance you have, and they want to know the face amount, the cash surrender amount, cash surrender value of the policies, and then they want to know the name of the insurance company and who the beneficiary is. A lot of times SBA will put themselves on your life insurance policy as a beneficiary, and then if something happens to you, it goes ahead and pays off the loan or part of the loan. So a lot of times they will do that. So that's part of the reason of wanting this, is to see if you have any that they can go ahead and sign to SBA or have them put down, so that if something happens to you, this SBA loan gets either paid off in full or paid off in part. So anyway, then at the bottom they basically have the signature page, the signature part where it says signature, has you print your name under it, has the date on the right, and then they have the Social Security number too right under the date. So anyway, and then there is some certification, that you're submitting this, and then they also want to be completed by each person submitting the information requested on this form and the spouse of any 20% or more owner when spousal assets are included. They basically want the spouse to sign. They want them to sign anyway, whether they have 20% or 5%. So anyway, they do tell you about criminal prosecution if the information is not accurate. So you don't want to, when I say fudge, I mean, it can vary. I don't mean to outright lie, so you might want to keep that in mind. Summary: if you're submitting, this personal financial, and I've shown these 3 pages, so you should have an idea of really looking at them, while I'm going down these amounts. So if you're submitting this personal financial statement on an SBA, loan, remember to have your spouse sign. The form for SBA needs to be dated within 90 days. So make the date within 0 to 60 days. And a lot of times, sometimes if we get them and the date's wrong, we will tell the borrower to change the date and to change it to something. So, if it's already 60 days old and we haven't even, we need to find a bank and have it approved and then go to SBA, it's going to be old by the time it gets to SBA. So really you want to go ahead and just, I always tell people to date it the day they're sending it in, and then we'll have enough time to do everything. The bank will also have you fill out a bank personal financial statement, and don't argue with them. Just say, yes, sir, we'll get that right to you. Give me the blank. Because basically you're just putting the same numbers on the bank form. The bank form will be very, very similar to this. Assets on the left, liabilities on the right, information at the top. They'll usually ask you about, your income. And then they'll have varying degrees of explanation of what those assets and liabilities are. Chances are they won't go into detail that SBA will, but they're very similar, so they're not hard to fill out. And like I said, we usually tell people to fill out the bank form because it's a lot easier than the SBA form. And then the bank form is like I said, is very similar. Bank's form may be simpler and shorter. But they're all different, so just remember that. And then remember, most of the information on the personal financial statement will not be verified by the bank or by SBA unless you're using the assets for collateral. And that is something some people don't understand. Usually we find out that the people made up everything when the loan goes bad. And then you start looking at those assets they listed on their personal financial and you find out none of them are there. So anyway, that being said, they could check on these. If you have some real estate that you're going to use as collateral, or you're going to, you've got, like I said, you're going to put in a certain amount of cash, they probably will look to see if that cash is there. So anyway, thank you very much. I really appreciate it. So anyway, if you got anything out of this, I hope you subscribe. And hit the like notification if you found anything useful. And so anyway, thank you very much. I appreciate it. And I will basically see you in the next video. Thank you very much.